Hello and welcome. I'm Rosemary McHugh, Tourism NI Director of Product Development. Thank you for joining us for today's webinar, Preparing for Brexit for Tourism and Hospitality Businesses. This session is being delivered as part of our Tourism Enterprise Development Programme. It has no doubt been a challenging year for the industry, and while COVID-19 has eclipsed so much, we are acutely aware that Brexit is an issue of concern for tourism businesses across Northern Ireland. Many businesses have been telling us they feel unprepared for the changes due to take effect at the start of 2021, with questions around the implications for cross-border travel, cross-border engagement and skills shortages. As with other tourism agencies throughout the UK and Ireland, Tourism NI is awaiting definitive direction from the UK government as it relates to Brexit. We've been liaising closely with our parent department, the Department for the Economy, to update information and address frequently asked questions in relation to Brexit for publication on our website. For today's event, we're delighted to be joined by Feargal McCormack, Managing Director at PKF-FPM, and some of his colleagues who will explore some of the implications for the tourism sector, including likely impacts on supply chain, customers, trade between Northern Ireland and GB, and travel between Northern Ireland, the Republic of Ireland, Europe and the rest of the world. We'll continue to keep the Brexit conversation live and will include Brexit-focused content in our regular communications with the industry and as part of our tourism recovery programme as Northern Ireland leaves the transition period at the end of this year. At Tourism NI, we're committed to rebuilding our industry. Our Tourism Enterprise Development Programme has been designed to help the Northern Ireland tourism industry survive and recover from the unprecedented events of 2020. The programme includes a series of webinars and online supports across a range of topics. We're very grateful for all your feedback to date and have taken this on board. We'll be announcing a number of further Tourism Enterprise Development webinars soon to support the journey to recovery in the new year. These sessions will include a focus on maximising opportunities from the closer to home markets and the ongoing impact of Brexit. You can access all the existing COVID-19 support materials, as well as signing up for webinars and expert advice on tourismni.com and covid19.tourismni.com. Most importantly, please let us know what you need and we'll make our best efforts to help. If, for example, you can complete the feedback form you'll receive following today's webinar, we can continue to tailor our programme to your needs. It's my pleasure now to hand over to Feargal for the main presentation. I hope you find the session useful and informative. Thank you.
Thank you very much, Rosemary. And today I don't think we could have delivered a more topical webinar for you than preparing for Brexit. And obviously preparing for Brexit specifically for Northern Ireland tourism businesses. And I think we all must be very conscious that the situation currently remains very fluid, unfortunately, and as a result there is great uncertainty. I'm fortunate that I'm joined this morning by three colleagues, Amy McShane and Colleen Flanagan from my own organisation, PKF-FPM Accountants, and also Ciara Lee from Middle Select Solicitors. I myself, Feargal McCormack, am the Managing Director of PKF-FPM Accountants, and I have been fortunate to have been involved in a number of the Tourism NI webinars during the past few months. And today's webinar is being delivered as part of Tourism Northern Ireland's new Tourism Enterprise Development Programme. And should I say at the outset that the slides should be used as an aid memoir, and they will be available after the presentation. We won't necessarily cover everything on the slide, and indeed different slide presenters use different techniques, but ultimately the slides will be there as an aid memoir for people. The webinar itself has been designed to help businesses operating within the Northern Ireland tourism industry prepare for the implications of Brexit and the protocol on Ireland, Northern Ireland. You hear people talk about all the time in the media, to the withdrawal agreement, which was effective which becomes effective from 1 January 2021. Now, one of the first things we'd like to highlight, and again, to be honest with you, this is a very challenging webinar because as we come off the webinar, things could have changed. But as of now, we give it as it is. But one of the most important things to appreciate is that much of the administration arrangements for the Northern Ireland Protocol will apply from the 1st of January 2021, just now 16 days away, regardless of the current UK-EU negotiations on a free trade agreement. And it's important we appreciate that. There will be different implications depending on whether there is a free trade agreement, but the core protocol administration procedures apply one way or the other. We should also like to acknowledge at the outset that one-to-one mentoring may be available to enhance your knowledge and understanding of specific elements of today's webinar. And we'll come back to this later towards the end of the webinar, explain how that will work. So in terms of the context of today's webinar, whilst the economic and social chaos caused by the COVID-19 pandemic has left few aspects of life unaffected, as we all are too acutely aware, one thing that has not changed is the date on which the Brexit transition period will end. So as I said earlier, with December the 31st now only 16 days away, it is vital that businesses, particularly Northern Ireland tourism businesses, prepare for Brexit disruption and the changes that lie ahead. The UK will leave the European Union at midnight on the 31st of December 2020. Now, there is a possibility that there could be an extension of practical issues, transition stuff and adjustment, but the reality of legally, the UK will leave the EU at 31 December 2020. And for over 4 years now, following the UK-wide referendum vote in June 2016, which favoured the UK by vote was 52% leaving the EU, and the subsequent decision of the UK government to notify the European Union of the UK's intention to withdraw from the European Union on the 29th of March 2017, I think it's fair to say, for most of our TV since that, Brexit, we've seen the beginning of the Brexit process. And certainly we at PKF-FPM, we have been involved in ongoing risk assessments and planning for a range of different Brexit scenarios since then, and also, to be honest, endeavouring to try and help our clients prepare for Brexit. And I think one of the really big challenges for Brexit, because it's talked about so much on the TV, but quite often the actual context of it is not. And personally, I believe that to understand the outgoings of Brexit, it is important to understand the context in which the whole Brexit is being dealt with. So our preparations were before and after the Northern Ireland Protocol, which itself originated as part of the draft Brexit withdrawal agreement in December 2017, and has now been updated on a few occasions, indeed much debate, but thankfully the most recent agreement, which is a very significant one, was last Wednesday, the 9th of December. And what has now been agreed in principle is the implementation of the Northern Ireland Protocol. And this is reflected from a UK government's point of view, and this is not disputed, in the Northern Ireland Command Paper, which was issued by Michael Gove on behalf of the British government on the 10th of December. Now, the protocol on Ireland, Northern Ireland, from now on, I think we'll just refer to it, if you don't mind, as the Northern Ireland Protocol. But basically, it was designed, it was incorporated within the withdrawal agreement in terms of legal documentation. And it was designed to maintain an all-island economy and to prevent a hard border on the island of Ireland. In reality, it was designed to reflect the conditions of the Belfast or the Good Friday Agreement. And its consequence is that Northern Ireland will retain tariff-free access to the European Union, while the rest of the UK will not. The UK, including Northern Ireland, will leave the EU on the 31st of December 2020. Now, there is still some clarification, even at this late stage, required in some areas of the protocol and how it will operate from a customs perspective. And Eiving will cover some of these in the course of her presentation. However, much like COVID-19, the economic impact of Brexit will not be felt evenly by all businesses. So, however, whilst the agri sector, fisheries, manufacturing and retail sectors will be the most affected, it's fair to say almost no business will remain untouched. And certainly it's hard to envisage any tourism businesses remaining untouched. Now, for service businesses, there are a range of issues, namely mutual recognition, travel and mobility of people, and data adequacy. Although it's fair to say that service businesses are not as affected as goods businesses. Now, from a tourism sector point of view, if you pause for a second and think about this, you obviously have both goods and tourism businesses operating within the Northern Ireland tourism sector. And it's fair to say that, and this has been one of the frustrations of the Brexit process to date, has been that it has to be acknowledged that the importance of reliable and timely information on Brexit over the coming weeks and months cannot be emphasized enough. Whatever the outcome of the current negotiations between EU and the UK, it is clear businesses will need to manage risk and embrace varying levels of uncertainty over the coming weeks, months, and may I suggest, perhaps years. It also, I think, as we're all very conscious, that Brexit is not the only reason for major business uncertainty at present. Obviously, the COVID-19 pandemic, and I think it's we're all acknowledged, and we've done this in previous webinars as well, that the challenge which we've identified now for some time will be planning and operating business with and post COVID-19, thankfully now with the vaccines hopefully going to come in gradually over the next few months to help the situation. But we also have a potential recession, global political uncertainty and climate change that will require businesses to implement agile business models to embrace change, including obviously digitalization and the evolving fixation with health to ensure our future sustainability. And you know, I think there are a few businesses that haven't had to do some form of re-engineering over the past 6 months. And more importantly, I think they'd be rather foolish if they think they're finished. The most important thing in the current business environment, and this also refers and is very relevant to Brexit, is that we remain agile in terms of our businesses and our ability to respond to changing circumstances. Now, in the course of today's webinar, what we hope to achieve by the end is that you will have a greater understanding of the context of Brexit and the Northern Ireland Protocol, of customs, tariffs and supply chain, of VAT online services and contracts, GDPR and data elements, the movement of people and employees, which is a very important element to this and certainly is a key point specifically to the tourism sector, and the Brexit impact on cross-border transport and tours, also very relevant to the tourism sector. Now, I like this slide because I think as an aide-memoire, if you go back and look at that in due course, one can identify at a very high strategic level that there are 8 key Brexit potential impact areas on your business. Now, there are many businesses where these 8 will not all apply, but I can assure you some of them will apply. But this is a very useful slide, and as I said, particularly as an aide-memoire, because it focuses on one page the very issues and thought-provoking concepts that maybe you need to think of if you haven't thought of in terms of your business and how Brexit may impact it. And in very simple terms, those 8 are supply chain. Now, this will vary depending on the nature of your business. You look at sourcing, you look at logistics, you look at location. Certainly, there are some people building up stock for Brexit. You look at market access, etc. Then you move on to people, which is a really important one for the tourism sector. And again, and later on, Ciara will cover this. You look at the mobility, the availability of people, the retention of staff, workforce strategy, and some tax elements. In terms of economics, it's at the macro level. What are the macro trends, demand, sentiment, forecasting, scenario planning? What if this happens or that happens? Again, don't lose any sleep over this, but just be conscious that these are issues. Certainly, IT systems, depending on the nature of your business, will be very relevant. And in some cases, you will have to make changes, whether it's for to reflect customs data requirements, etc., process readiness, and indeed IT investment. Legal and regulatory, again, this will impact various businesses in different ways, but you've got to be conscious that there are potential issues, whether it be in terms of customers, in terms of licenses, suppliers, distributors, distribution agreements, etc. In terms of treasury, funding, tax and currency. Yes, strategy. And this is really at a high level. Have you identified perhaps not only the threats, but the opportunities for your business? And then thought out whether you want to divest, perhaps embark upon an exciting acquisition investment strategy in the context of a Brexit opportunity. And finally, the one probably at present, which we're all really focused on present, in addition to people, is the trade one. You know, what are the implications for businesses based in Northern Ireland in terms of tariffs, in terms of VAT, in terms of regulatory, in terms of impact, support services, etc., and obviously customs. Now, there's nothing to worry about here, and my colleagues in the rest of the webinar, they will go into more detail of the more prominent practical issues that most businesses will affect every day. Now, in terms of the Northern Ireland Protocol, I think it's important because, believe it or not, so no matter how often you hear these things, quite often they're not just clear and concise to exactly understand. So what the Northern Ireland Protocol means is that it's now agreed that no EU member state will be able to apply any tariff or related barriers to goods from Northern Ireland. Thus, point number one, this does not just apply to the movement of goods from Northern Ireland to the Republic of Ireland. Thankfully, it applies to the movement of goods from Northern Ireland to any other European Union member state. Quite a significant difference. Now, it's also important to appreciate that in this context, and then this is where you have to avoid the politics, because different politicians use different words for this, but the reality is, the factual position is that even with a trade deal, Northern Ireland will have an advantage over other businesses in the UK. And indeed, you could say other businesses in Europe. Now, a trade deal between the European Union and UK would eliminate, if that happens, if that's signed, it would eliminate tariffs for UK businesses trading with the EU, but only Northern Ireland firms would avoid new regulatory checks because they would still be following the EU single market rules. Northern Ireland firms would be in respect of goods. The UK government, on the other hand, has also promised and has now agreed as part of the protocol that Northern Ireland businesses, with a few exceptions, will continue to have unfettered access to the wider UK market. However, if you think about that, the flip side of that in terms of the protocol is that goods, particularly food arriving in Northern Ireland from the rest of the UK, will be subject to a new range of controls and checks. That's a fact. Whatever anybody tells you, that's a fact. You read the Northern Ireland Protocol, it's in black and white. And basically, also it's fair to say that a very small proportion of goods from GB to Northern Ireland trade could also be hit with tariffs. I stress that's a very small proportion and not yet defined. Now, goods brought in from Great Britain that are sold to consumers in Northern Ireland or are used in Northern Ireland are tariff-free. And you may have heard in the last few days, obviously, and I think it was announced on last Thursday, Wednesday, Thursday, a grace period has been granted for supermarkets for an initial 3 months in Northern Ireland, with an extension potentially up to 6 months for chilled meats. Indeed, if you happen to be involved in some pharmaceutical products, it's believe it or not, it's 12 months. However, and this is quite significant for the tourism business, and I'm sorry, but this is reality as I tell it today, as I see it, and as my colleagues see it. Unfortunately, further clarification is required on whether the grace period applies to any other companies involved, for example, like in the tourism sector, tourism hospitality sector, in food preparation or distribution. That is not clearly clarified within the document yet. And obviously, there'll be further papers coming out to clarify that. Now, we would suggest, or perhaps we wouldn't suggest, but the UK government would suggest, if you get goods from GB, or you're anticipating goods from GB after the 1st of January, they would say it's essential. We would suggest it as opposed to essential, that you sign up, and Amy McShane will cover this later on, because we're just personally not just as convinced yet on the new free trader support service. But it will help you move goods between Great Britain and Northern Ireland, or bring goods into Northern Ireland, help you bring goods into Northern Ireland from outside the UK. And indeed, it is promised that this service can complete declarations on your behalf. However, the Trader Support Service is yet to go live, and there are lots of questions about how it will function. Further information on and the rollout of the UK Trader Scheme is needed as soon as possible, and that's why I can't be more specific. And it's also fair to say that it is anticipated that new anti-avoidance provisions to stop Northern Ireland being used as a backdoor to the GB market will also be introduced. And we think that tied up in part of those new procedures will be the definition of what is a Northern Ireland good. At present, it's a very broad definition, and it's anticipated that that definition will be narrowed. So there are still lots of unknowns. For example, the movement of parcels, labelling, etc. still remain to be addressed. But hopefully over the next few days, we will be more enlightened of what the issues there are. Now, just before I conclude and pass on to the next speaker, at a high level, a couple of other practical issues in terms of Brexit. I believe one of the impacts on the tourism sector in Northern Ireland will be the impact of currency fluctuations. And I think currency will actually become more significant perhaps than it has in the past in terms of fluctuations. So it's an area to be conscious of. We're not going into today, but certainly if somebody would like to talk about that further, feel free to contact me through the Tourism NI in due course. The availability of labour going forward is a very key area, and this is an area that obviously Ciara Lee will go into more detail. But suffice to say that the Common Travel Area Agreement between the UK and Ireland, which was before the EU, it still applies, and therefore there really is no impact in terms of UK and Irish citizens. However, other matters that need to be addressed by Northern Ireland businesses immediately is the EU settlement scheme, and that relates to EU citizens who are currently working in your business, and you've really got to, that aren't Irish, you've really then got to apply for settled status. Similarly, in respect of frontier worker permits are required in respect of Northern Ireland businesses who have EU nationals working for them who actually commute every day from the Republic of Ireland. Again, if you're working along the border, in particular in Northern Ireland, it's quite regular. A number of your staff could be coming from the south. And if they're EU nationals as opposed to Irish nationals, which obviously are also EU nationals, but EU nationals excluding Irish nationals, then you have this whole concept of a frontier worker permit, which is required. Now, a few weeks ago, when I was delivering one of these seminars in terms of, you may remember I was talking about recoverability for the tourism sector in Northern Ireland from COVID-19, I was trying to make a very strong argument that you should lobby the government for special VAT rates, for reduced VAT rates or concession VAT rates to be applied in the tourism and hospitality sector as a stimulus to economic activity, given the fact that the tourism and hospitality sector has probably been the hardest hit as a result of COVID-19. I'm more convinced than ever that that is a major economic argument that should be made. And I think the reason why I like it is, as opposed to the Eat Out and Help Out scheme, which was a great success, but it was tied to a couple of days of the week, up to Wednesday or whatever. This scheme applies the whole week, and it would cover all businesses in the sector. So I strongly would argue the representatives of the tourism sector to lobby hard for reduced VAT rates for the sector. Now, on the other hand, there is a downside to the Northern Ireland Protocol, and that is that duty-free sales will not be available either for GB or ROI, Republic of Ireland visitors to Northern Ireland. Now, there's three other small points I'd like to cover just before, and again, they'll be covered in more detail, but I'm covering them at a high level because I think certainly the first one in particular at a high level needs to be covered. And these are supply chains, shopping, and EU Irish companies with no EU resident directors. Now, in terms of supply chain, it's fair to say that entities in the hospitality sector are commonly closely entwined with GB entities, either in owner-subsidiary relationships or in terms of contractual supply arrangements. Now, these arrangements we would suggest should be examined to establish whether they represent the most efficient structure going forward. For example, goods and services invoiced by a GB entity, but delivered from an EU member state, in our view going forward, will not be efficient. Also, the acquisition of goods as a domestic sale from GB, when those goods might move to the EU, may also be problematic. That's one of the areas that's very tricky, and probably take a few months till everybody gets to understand what's happening. In terms of shopping, it's also fair to say that there is scope for the exploration of the impact of Brexit on shopping across the Irish Sea. Because post-Brexit, limits on personal shopping will apply between GB and Ireland. For example, €440 by air is the limit you can buy in London, or €330 by road or ferry. Now, the significant point is there are no limits between Northern Ireland and the Republic of Ireland. And therefore, there could be scope for Northern Ireland to become a convenient place for high-value shopping, although the precise modality of that would need to be worked out. But there may be an opportunity here for retailers operating specifically within the tourism sector. And finally, a little thing I want to draw to your attention, but actually very significant. And obviously, again, if some of you know a bit about me personally in our business, I'm involved in a lot of cross-border business, north, south, south, north. And there's a quirk coming up that you should be very careful and be aware of. That post the UK leaving the EU on the 31st December, it's important to appreciate that if you're related to, if a Northern Ireland business has a related entity or Irish company in the south of Ireland, that if that company in the south of Ireland does not have an EU resident director from 1 January 2020, it can't trade. Now, don't panic, because there is likely be a transition period which hasn't been announced yet, post-Brexit. But the most important point is you can't sit and do nothing. You need to take action. And it's important to appreciate that for Irish companies who do not have a resident EU director, and there are many businesses in the tourism sector that have related Irish entities, to continue trading in the south, there are two options which they must either achieve, one or the other. The first option is a non-resident bond. The company purchases a non-resident bond to the value of €25,000, which has to be valid for 2 years. Or the second option is the company establishes what is deemed, and what's the careful wording here, a real and continuous link with the revenue commissioners, which is similar to the HMRC in the UK, the revenue commissioners in the Republic of Ireland. Now, for the revenue commissioners to satisfy themselves that that a continuous link exists and issue what's called a continuous link certificate, be aware that the intention to create a business in Ireland would not be enough to get this certificate. So therefore, the company will have to confirm, and by the way, the rules have been slackened a wee bit in this area, thankfully. It was a lot tougher up to a few weeks ago. The company will have to confirm that one or more of the following conditions are satisfied. This is the Irish company. Firstly, that the affairs of the Irish company are managed by one or more persons from a place of business established in the state, that's in the south, and that the person or those persons who is or are authorized by the company to act on its behalf. Secondly, the company carries out a trade in the state. Or thirdly, the company is a subsidiary or a holding company of a company or another body corporate that satisfies either or both of the specified conditions 1 and 2. If you get that link certificate from the revenue commissioners, then what you have to do, you then basically complete a form called a B67, which is not that difficult to complete, by the way, and you submit it on to the company's registry office in the south. But just be conscious of that, because we're very aware there's a lot of businesses operating in the Northern Ireland tourism sector who have related businesses in the south. So without further ado, it gives me a great privilege to pass you on to my colleague, Aimee McShane.
Thanks for that, Feargal. So hello, everyone. So today, I'm going to have a look at the impacts of Brexit in terms of the movement of goods. So just to set the scene, Brexit, what does it mean? So from the 1st of January 2021, that is following the end of the transition, the UK will become a third country which will operate a full external border as an independent nation and will be free to strike its own trade deals for buying and selling goods and services around the world. So with the exception of trade from Northern Ireland, which is subject to the Northern Ireland Protocol and which Feargal has mentioned, all goods entering the EU from GB, that is England, Scotland or Wales, or leaving the EU to go to GB will be subject to customs formalities. So just in terms of customs then, what is it? So it's one of the oldest taxes. It controls what enters the marketplace. So there is a price for entry, and this price is both to raise money and to level the playing field for domestic producers. We don't want any unfair competition. It also ensures that goods entering meet the standards required to be placed on the market, and then it also detects and deters smuggling and international criminality. So basically, goods may not legally enter the customs territory for any reasons unless they're cleared by customs, and that means the payment of taxes and duties where applicable and being compliant with all relevant regulations. So just like any tax, you must first register with the Customs Administration so they know who you are and that you trade internationally. And to do this, you have to have an EORI number. So this is an Economic Operators Registration and Identification Number. So I assume all businesses on the webinar today that do purchase goods from GB, as in England, Scotland or Wales, have one of these. And if not, don't worry, go on to gov.uk as soon as you can, or even put in a Google search and type apply for EORI number, and you should have it within 24 hours. So for every export and import consignment, a declaration is then made, and this details the goods, their route of travel, and it also gives proofs that you're compliant with regulations. So this declaration, the entries are mostly codes and reference numbers, and for those that aren't familiar, I have included an image of the declaration, and this is known as a SAD document, a single administrative document. Just be careful, these documents are complex to complete. I know it only seems to be one page. This is the paper version, but essentially what's on this is what's required to be uploaded electronically. So they're uploaded electronically, and then it undergoes like a computerized risk rating. And hopefully you get green, but sometimes their checks be required, and that will be deemed as a red. So why do we need customs? Well, basically, if we don't have customs, there's no data and no control in imports or exports. There's a high risk of prohibited, restricted and substandard goods entering the market. It leaves the domestic market open to exploitation and the likely collapse of some businesses, and ultimately it ends, trade just can't continue. So our focus today is what Brexit means for Northern Ireland tourism and hospitality businesses. I know Feargal has covered some of this, but I'll just go over it again. So the UK and the EU reached agreement in respect of Northern Ireland, and this agreement is the Northern Ireland Protocol. So just last week, the Joint Committee of the UK and EU outlined that they agreed in principle all issues relating to the implementation of the protocol, and confirmed that this agreement will come into effect on the 1st of January and does apply regardless of whether or not this free trade agreement, which is much talked about on the news at the minute, comes into play. So it was designed to avoid a hard border in the island whilst ensuring that the UK, including Northern Ireland, leaves the EU as a whole. So just to outline what the protocol means for tourism and hospitality business in Northern Ireland, I thought it would be useful to take you through the various trade flows and then to give you an example at the end. So let's start with the easier trade flows first. So trade in goods between Northern Ireland and Northern Ireland and other EU member states. Trade in goods across the island of Ireland, together with trade in goods between Northern Ireland and other EU member states, is to continue unaffected. So there'll be no change at the border, there'll be no new paperwork, no tariffs or regulatory checks. So I've come across, some some of our clients who have said that their EU suppliers are saying they're going to increase prices. I would strongly recommend that you ask, do they understand the Northern Ireland Protocol? There might be other reasons that they maybe procure their goods elsewhere, but you know, it's important to make sure they understand that the Northern Ireland Protocol stands. So in terms then of trading goods between Northern Ireland and the rest of the world, this will continue as is, i.e. there will be a requirement for customs declarations to remain. What I would say is that, you know, businesses in Northern Ireland who currently buy from the rest of the world, you know, be aware that Northern Ireland can currently benefit from EU preferential agreements, but going forward and at the minute, you know, Northern Ireland won't be able to benefit from those. So if it turns out that the UK has not agreed a free trade agreement with the country that you want to trade with in the rest of the world, that is outside the EU, there's likely to be increased prices. So to put this into context, take for instance, as part of an experience you provide in Northern Ireland, you procure goods from the USA. If the UK fail to reach an agreement with the USA, it is likely that your costs will increase as you currently benefit from the preferential rates the EU has with the USA. So, in relation to the movement of goods from Northern Ireland to Great Britain, so the UK has committed to guaranteeing in legislation unfettered access for Northern Ireland businesses to the rest of the UK internal market from the 31st of December 2020, ensuring that trade from Northern Ireland to Great Britain continues as it does. So during a speech last week in the Commons, Michael Gove reiterated commitment to unfettered access, stating that the agreement that the UK and EU have reached removes any prospect for export declarations or exit summary declarations for Northern Ireland goods moving from Northern Ireland to GB, except in very limited circumstances. So that is the movement of endangered species and diamonds. So that will mean no declarations, tariffs, regulatory checks or customs checks or additional approvals for Northern Ireland goods to be placed on the UK market. At the minute, and as we've already alluded to, the definition of Northern Ireland good is very broad and needs to be narrowed, and we do expect a tighter definition in the second half of 2021. But we do believe at the minute that it will be goods of Northern Ireland origin, that is where they are manufactured or underwent their final substantial change. On reviewing the detail, however, it has become apparent that businesses moving goods from Northern Ireland to GB will have to provide information to HMRC electronically. So that is over and above what they do provide today. But the good news is, look, it won't be formal customs, and therefore there'll be no danger of these goods being stopped. If you do move goods from Northern Ireland to GB via the Republic of Ireland, which many businesses do via Dublin Port, this will still be possible, but you will need to use transit to suspend any duties or tariffs. So moving to where the impacts of Brexit will be felt. The protocol means that UK authorities apply EU customs rules to goods entering Northern Ireland. The movement of goods from GB to Northern Ireland will be treated as an import into the EU, and for that reason, full electronic import declarations and checks and controls in some instances, like for food and of animal origin or plant origin, will be required. And then once they're within Northern Ireland, you know, they're free to move within the EU. They're in what's known as free circulation. So they can be sold, processed or moved anywhere in the EU without further formality. So the UK position, the UK government's position remains that there should be no tariff payable on all internal UK trade. So at the end of the last week there, we heard about how this will work. So it was agreed in principle that a new UK trader scheme will allow authorised businesses to undertake that the goods that are moving into Northern Ireland are not at risk of onward moving to the EU and therefore not liable to EU tariffs. The scheme will include safeguards to ensure it's not available to those who aren't you know, compliant at the minute, or maybe those that even have serious criminal records. So the scheme will be focused on goods being sold or provided for final use by end customers located in Northern Ireland. It'll only be open to businesses established in Northern Ireland or those that have really close links, and there will be a criteria for that. So it will not be available to businesses established only in the EU. So it will be important for businesses in the tourism and hospitality sector in Northern Ireland who want to continue or who are reliant on purchasing goods from GB, that they get the correct assistance to ensure that they're authorised to use this new system so that you avoid paying duties and having to reclaim. We have no details as yet, as to how you'll get such an authorisation, but it will be important, as if you don't have authorisation and there is a no deal, you will have to pay the tariffs and then go through the process of having them rebated. So obviously, there would be a cash flow issue there. So moving on then, in terms of other requirements for the movement of certain goods. I'm sure you've heard in the news about the need for export health certificates and SPS checks, that is sanitary and phytosanitary checks for animals of plant and animal origin. The good news is that the UK government confirmed that they will introduce a movement assistance scheme for agri-food traders and cover the costs associated with these, so hopefully mitigate somewhat price hikes in that respect. In addition, last week we heard that there would be easement for 3 months in relation to these SPS rules, but businesses importing food of animal or plant origin must be aware that these easements will only be applicable to authorised traders, and that is traders identified by DERA as being authorised. And paperwork will still be required, albeit it will be, simplified. So it's a bit like having trusted trader status. The larger supermarkets would have such status, but for other distributors it may be difficult, and it'll just be important for them to understand how and if they can get approval. Also, look, if any of the hospitality businesses purchase chilled meat from GB, take for instance sausages maybe that they purchased to provide the Ulster fry that everyone loves, from the 1st of January 2021, such products won't be allowed to enter Northern Ireland, as this is an EU rule. Goods of this type simply are not allowed to enter the EU from a third country. So what this means is that after the 6 months, Northern Ireland businesses who still want to provide the Ulster fry will have to maybe look to markets, local markets, or indeed markets in Ireland or the rest of the EU. So let's look at an example then. I took a hotel which is registered in Northern Ireland. It's a company, and they purchased bed linen from a supplier based in GB. So what are the implications of this transaction post 31 December 2020, regardless of whether or not a free trade agreement is reached? So the bed linen will have to be imported to Northern Ireland. So that means there'll be full electronic import declarations. It's unclear at the minute in terms of the VAT, will it be domestic because it's UK, or will it be import? My colleague Colin will touch on this. If there is no free trade agreement, it's likely that it will revert to WTO, World Trade Tariffs, and for cotton bed linen, that rate is 12%. However, as mentioned before, if you can avail of the UK Trader Scheme, no tariffs will apply as the goods will remain within the UK. But in terms of the declaration, there's still a lot of information that you'll need to provide. And this will include your supplier's name, VAT number, EORI number, their address, your name, VAT number, EORI address, your goods description, commodity codes, quantity, value, currency, weight, intercoms. You can see what I mean. There's a lot of detail that is required. And just in respect of the commodity codes, ask your supplier to provide these details and for origin. But as the importer, it will be your responsibility to check that you agree with these codes provided. So what are your options? Our advice would be, talk to your suppliers in GB to understand what steps they have taken to support trade given Brexit. Understand who will be responsible for the customs obligations. If the GB supplier really wants to continue to trade with you, they may take on the responsibility of customs entirely. But you should confirm what is known as the Incoterms to be adopted by your suppliers in GB. And this really determines which party holds responsibility for import and export formalities. I would strongly advise that these are documented and not just verbal. So the Incoterm DDP means that delivered with duties paid. And this basically means that the supplier will look after all the customs formalities. But just be careful on this, because it's likely to, result in a price hike from your supplier. If you, the customer, alternatively, you know, are the importer, have to be responsible for the import declaration, how will you deal with them? Will you use the new trader support service, which I will touch on briefly? Will you engage with a customs agent to carry out on your behalf? And note that the express carriers have ramped up to capacity to be able to support on this. And other options to consider will be, look, avoid at all costs moving goods in the first few weeks of 2021. If you can stockpile the goods, I would, or perhaps look to local suppliers, or even suppliers within Ireland or the rest of the EU. So on to the trader support service. Whilst the trader support service will be of significant support and economically advantageous, given it is free, it's important to note that it hasn't gone live as yet. So it's in its infancy, and there may be difficulties experienced with the offering, particularly in the first few weeks of 2021. So therefore, whilst we would advise signing up for the trader support service, if the movement of goods from GB to Northern Ireland is critical to the continuity of your trade in the first few weeks of 2021, we would strongly recommend that you onboard the services of a reputable customs agent. And a reputable one, you know, look for someone that has AEO status, that's authorised economic operator status, or speak to your current logistics provider to understand whether they can support, you know, in meeting your additional customs obligations which arrive on the movement of goods from GB to Northern Ireland. Look, it is inevitable. There's going to be disruption and delays, especially during the first few weeks of 2021. So be aware of increased lead times for moving goods. Like, it just simply will not be like what it is now. You could then use the trader support service to test the import of less critical items from GB, and then as processes become clearer and any difficulties are overcome, given it may be more economically advantageous than using a customs agent to facilitate the movement of goods, you know, it is an option that you could look at. So I thought it would be important to touch on this for businesses in the hospitality and tourism sector who move goods temporarily between GB and Northern Ireland. There are special procedures which can be used. So take, for example, a musician who regularly plays in GB. They will have to take musical instruments back and forth, perhaps several times a year. So an ATA carnet, which can be purchased from a Chamber of Commerce, is an international customs document that permits the tax-free and duty-free temporary export and import of non-perishable goods for up to 1 year. So just be aware that that is available. So that's trade in goods covered, and just be clear, that was all in relation to trade in goods. And now for services. So unlike trade in goods, and this is where it maybe becomes a wee bit complicated in terms of Northern Ireland status, Northern Ireland will become a third country in respect of the provision of services to the EU. So for tourism and hospitality businesses, whilst this has been largely overlooked, given the focus has been on goods, those businesses involved in the provision of services, so take for example the Harf Marquis to Ireland, they will need to be aware of the challenges when trading with the Republic of Ireland and indeed the rest of the EU. So these challenges include data flows, availability of labour, and the changes to how VAT will operate. So I'm now going to pass you to my colleague, Colleen Flanagan, and she is going to discuss VAT, and then following that, Ciara will look at labour and data flows. So thank you very much.
Hi, my name is Colleen and I'm a tax manager in PKF-FPM, and today I'm just going to talk a little bit around the VAT implications of Brexit and what this means for tourism and hospitality businesses throughout Northern Ireland. So I thought it might be useful to start off by looking at some VAT fundamentals. VAT is a transaction tax, and ultimately we need to ask a series of questions to determine the appropriate VAT implications of a transaction, and then determine what Brexit will mean for the VAT implications of that transaction. So we need to ask ourselves what is being supplied. We'll see as the presentation goes on that different VAT rules apply to the supply of goods and the supply of services. Who are the goods or services being supplied to? So again, different VAT rules will apply depending on whether we're supplying goods or services to business VAT registered customers or to private customers. Where are the goods being supplied? So for example, if we have a domestic supply from a Northern Ireland supplier to a Northern Ireland customer, that type of transaction will remain largely unimpacted by Brexit. However, when we look at our cross-border supplies, so for example, if we're acquiring goods or services from GB-based businesses, if we're supplying goods or services to ROI or EU-based customers, then those type of transactions will be impacted from a VAT perspective by Brexit. And then finally, we need to determine what our role is in the transaction. So if we're a supplier or a purchaser or an exporter or an importer, and that will determine what our roles and responsibilities from a VAT perspective are in terms of the transaction. So as I mentioned, there are different VAT rules for the supply of goods and the supply of services. So we might begin by looking at the supply of goods. It's important at the outset to note that regardless of whether there's a deal agreed before the end of the transition period, there will be new UK VAT regime applicable in Northern Ireland from 1 January 2021. So whilst Northern Ireland will remain part of the UK VAT regime, Northern Ireland will continue to follow EU rules for VAT on goods. So what does this mean? If we look at the movement of goods between GB and NI and NI and GB, there's a divergence of opinion currently between the EU and the UK. So EU guidance currently indicates that this will be considered an export from GB and an import into Northern Ireland, and postponed VAT accounting will be available. We'll look in a little moment at what postponed VAT accounting means for Northern Ireland businesses. Under the UK guidance, in contrast, this will continue to be treated as a domestic supply, with output and input VAT being treated as it currently is. So if we consider, for example, a Northern Ireland hotelier purchasing bed linen from GB, under the EU guidance, the GB-based supplier would treat this as a zero-rated export, and import VAT would then be payable at movement of the goods into Northern Ireland. Postponed VAT accounting would be available. Under the UK guidance, the GB supplier would charge UK VAT, and the Northern Ireland hotelier would be entitled to claim an input VAT credit subject to the normal recoverability rules. So like many other aspects of Brexit, we're hoping for further clarity in this regard over the next few weeks. Then if we look at an EU to NI and NI to EU supply, we see that the current VAT rules will continue to apply, and this will be treated as intra-community supply. So again, if we look at our Northern Ireland hotelier, this time purchasing bed linen from an ROI-based supplier, this will be deemed an intra-community acquisition by the Northern Ireland hotelier. The ROI supplier will zero rate the supply, and the Northern Ireland hotelier will self-account for the VAT arising. Northern Ireland businesses will have access to an EU VAT number, which will entitle them to plug into the EU-wide VAT collection system. Finally, if we look at supplies between the rest of the world and Northern Ireland and the rest of the world, import and export VAT will continue to be applied as it is now, and postponed VAT accounting will be available. So I think at this point we have a little look at what postponed VAT accounting means for Northern Ireland businesses. So both the UK and Irish governments have committed to the introduction of postponed VAT accounting. Traditionally, where goods have moved from the rest of the world to the EU, import VAT has been payable at the point of importation. Where an input VAT credit can be claimed, it was claimed potentially several months down the line through the filing of the trader's VAT return. Under postponed VAT accounting, traders will be entitled to account for import VAT arising through the VAT return, at which point a simultaneous VAT credit can be claimed where traders are entitled to do so. So this holds significant cash benefits for the trader. If we take our example again of our Northern Ireland hotelier, this time purchasing goods from China, and we assume that £200 of VAT is arising on this transaction. Traditionally, the £200 of VAT would have been payable at the point of import into the EU, and potentially several months down the line, the input VAT credit could be claimed. This way, under postponed VAT accounting, the Northern Ireland hotelier will account for the £200 on their VAT return, assuming 100% recoverability, and input VAT credit will simultaneously be claimed. The transaction will be VAT neutral, and the transaction won't impact the Northern Ireland hotelier's cash position. So really beneficial to businesses throughout Northern Ireland. It's important to state that importers that aren't registered for VAT will continue to pay VAT at the point at which the goods arrive to the UK. So postponed VAT accounting will only be available for VAT registered traders. There is no requirement to obtain permission to apply postponed VAT accounting. However, when traders are filing their customs declaration, they should indicate on the customs declaration that import VAT will be accounted for on the tax return. So now if we move on to the supply of services and we look at our general rules, again, it's important to note at the outset that the supply of services, unlike the supply of goods, will continue to follow the UK rules. So there'll be no differentiation between GB and NI from a VAT on supply of service perspective. Again, important to note that where Northern Ireland businesses are providing domestic supply of services to Northern Ireland-based customers, this will remain largely unimpacted by Brexit, and UK VAT will continue to apply where appropriate. However, we do need to look at the impact of Brexit on our cross-border supply of services. So under the general rules, business-to-business supply of services, the place of supply, and ultimately the place where VAT is due, is where the business customer is established. For business to private customers, the place of supply is where the supplier is established. So if I have a Northern Ireland business supplying services to VAT registered businesses in the Republic of Ireland, my VAT may be payable in the Republic of Ireland. Where I'm supplying a private customer in the Republic of Ireland, the place of supply Northern Ireland. B2B rules therefore create potential registration requirements in any EU member state where you're supplying business customers with services. However, there's currently a reverse charge mechanism in place whereby your EU-based business customer can self-account for the VAT arising, ensuring that Northern Ireland businesses aren't required to register in each EU member state in which they supply business customers with services. So now we need to look at what will happen to cross-border supply of services, the VAT treatment of these services from 1 January 2021. If we look at the supply of services from Northern Ireland to GB-based businesses, these will, and consumers, these will continue to be treated as a domestic supply, with output VAT being charged at the applicable rate and input VAT recovered subject to the current rules. For NI to EU, B2B, so business-to-business services, will continue to be outside the scope of UK VAT. Where services are received from EU businesses, Northern Ireland businesses should account for reverse charge VAT, so they'll be required to self-account for VAT under the normal B2B rules. For B2C services, guidance indicates at present that such services will continue to be subject to UK VAT. For Northern Ireland businesses supplying services to the rest of the world, the current rules will continue to apply. So we can see from this slide that under general rule supply of services, Brexit won't have a huge impact from a VAT perspective. However, there are a number of exceptions to the general rule, and a number of these exceptions are applicable to the tourism industry. And so I've tried to pinpoint the main exceptions from a hospitality and tourism perspective. So if we look at land-related services, the place of supply will always be deemed to be the place where the land is located. So for example, for any Northern Ireland businesses providing accommodation in hotels, holiday camps, camping sites, timeshare accommodation, place of supply will be deemed to be Northern Ireland where these services are provided in Northern Ireland, and this would continue to be the case post 31 December 2020. The VAT treatment of the hire of a means of transport is highly dependent on who the supply is being made to and whether the supply is short-term or long-term in nature, with supplies of no more than 30 days generally considered to be short-term in nature, and these are likely to be most applicable for the hospitality and tourism industry. So for short-term hire, the place of supply is the place where the vehicle is put at the disposal of the customer. So for companies in Northern Ireland, hiring touring caravans, trailers, car hire to business or private customers post 31 December 2020, as is currently the case, the place of supply will be Northern Ireland, where the vehicle is put at the disposal of the customer in Northern Ireland. For restaurant and catering services, the place of supply and the place where VAT is payable will be the place where the services are physically carried out. For passenger transport, such as coach transport, the place of supply is the place where the transport takes place. So for any Northern Ireland-based businesses providing coach transport services in Northern Ireland post 31 December 2020, this will continue to attract UK VAT. For admission to events, such as the hire of a corporate box at a sporting event or payment for admission to a musical event, the place of supply is the place where the event is performed. And this applies regardless if it's a business customer or a private customer. B2C services relating to cultural, artistic, sporting, entertainment and similar activities, the place of supply will be the place where the activities are performed. It's important to note with this that B2B services, so business to business services relating to cultural, artistic, sporting, entertainment and civil activities will continue to follow the general B2B rules, and the place of supply will be the place where the business customer is established. So if we move on to the use and enjoyment provisions, the use and enjoyment provisions dictate that the place of supply is where the effective use and enjoyment takes place. So the use and enjoyment provisions currently apply where the place of supply would be outside the EU, but services are effectively used and enjoyed in the UK, or where the place of supply would be the UK and therefore UK VAT would be due, but the services are effectively used and enjoyed outside the EU. So the use and enjoyment provisions only apply to specified services. And from a tourism perspective, the letting on hire of goods, including the hire of means of transport, are the most applicable. It is likely that in terms of the letting on hire of goods, these are likely to be deemed to be used and enjoyed where the goods on hire are used. And the use and enjoyment provisions are potentially best demonstrated through outlining a number of examples. So if we look at the scenarios listed on the screen, where we have an Australian tourist hiring a video camera from a UK provider during a visit to the UK, the video is used in the UK, the video camera is used in the UK, and therefore the place of supply is the UK and the UK VAT is due. A UK golf shop hiring out a set of golf clubs to a UK customer for use on a holiday in the USA, the place of use and enjoyment is outside the UK and EU, and this falls outside the scope of UK VAT. An individual hires a boat which is put at his disposal in the Channel Islands, but he spends 3 of the 4 weeks of hire in the UK. UK VAT is due on the percentage of the hire that relates to the time spent on the UK on the boat. So it's necessary in that example to apportion the use and enjoyment which takes place inside the EU and outside of the EU. So now we need to consider the impact of Brexit on these use and enjoyment provisions, and again, potentially best demonstrated through use of a case study. So if we look at a UK registered business hiring audio-visual and lighting equipment to a UK customer, during the period of hire, the customer uses this equipment 60% in the UK, 25% in France, and 15% in the USA. Pre-Brexit, 85% of this transaction was used and enjoyed in the EU, and therefore 85% was liable to UK VAT. 15% was outside the scope of UK VAT. Post-Brexit, 60% will be liable to UK VAT, 25% will be liable to French VAT, with the UK and EU elements of this supply treated separately, and 15% will be outside the scope of UK VAT. The Brexit implications on the use and enjoyment provisions therefore create potential registration requirements for UK businesses throughout the EU. Most EU member states have nil registration thresholds for non-registered traders, and so even small supplies could result in potential registration requirements in EU member states. In addition to this, it places an obligation on suppliers to effectively monitor where their customers intend to use supplies. This is obviously very difficult from an administrative perspective. It should be noted that the use and enjoyment provisions are a very technical aspect of VAT, and where traders are in any doubt, additional assistance should be sought. So if we move on to look at the Tour Operator Margin Scheme, or TOMS, and I think at this point it's important to point out that there are a number of EU simplifications which are currently used by businesses throughout the UK, and the availability of these post 31 December 2020 need to be reviewed. So TOMS is a special scheme for businesses that buy in and resell travel, accommodation and certain other services as a principal or undisclosed agent. And TOMS may apply to tour operators who wouldn't even traditionally view themselves as tour operators. So if we look at example for hoteliers who buy in passenger transport services to transport guests to and from the hotel at the beginning and end of their stay. If we look at coach transport providers who buy in hotel accommodation to provide travel packages, or if we look at conference organisers who provide hotel accommodation to delegates, they may all fall within the remit of the Tour Operator Margin Scheme. What does TOMS mean for businesses? So TOMS allows businesses to account for VAT only on the difference between the amount you receive from your customer and the amount that you pay to your supplier, so your margin. The element of the supply that is bought in and subsequently resupplied, that is not charged on this element of the supply and cannot be reclaimed on this element of the supply. And that is accounted for on this element of the supply by the provider of the service in the relevant EU member state. The scheme also ensures that VAT due can be accounted for under a single UK VAT registration and helps avoid multiple VAT registrations throughout the EU. Currently, margin on travel supplies, which is enjoyed in the UK and the EU, is subject to the zero rate of is subject to the UK standard rate, and margin on travel supplies, which is enjoyed outside of the UK and EU, is subject to the zero rate of VAT. From 1 January 2021, HMRC indicated that any margin on travel supplies to be enjoyed outside of the UK can continue to be zero rated by UK tour operators. This potentially gives UK tour operators an advantage over EU tour operators, whereby UK tour operators will zero rate any European leg of a travel supply and the margin on same, whereas UK tour operators will be required to apply different rates of VAT to each leg of the trip. Additionally, pre-Brexit, non-EU tour operators were not required to register for VAT in individual EU member states. Previously, this didn't include the UK, but obviously from the 1st of January 2021, this will include the UK. Given the unfair advantage, or the advantage that UK tour operators would have over EU tour operators, it is expected that we will hear more on the post-Brexit operation of TOMS from the EU over the coming weeks. Now we'll move on to e-commerce, which is becoming an increasingly important mechanism and sales mechanism for businesses throughout the UK. So post 31 December 2020, distance selling rules will continue to apply. So Northern Ireland traders will continue to apply UK VAT to the sale of goods to EU member states until the annual value of those sales exceeds the VAT threshold in the country of destination of the goods. From July 2021, the e-commerce VAT package will come into play in the EU, and it's important that all Northern Ireland-based businesses understand what this means for them. So the VAT package will abolish the distance sales threshold. There'll be the implementation of a unique common threshold of €10,000 in each EU member state. And assuming the annual sales value to that member state falls below this threshold, Northern Ireland traders can continue to apply UK VAT. But where this threshold is exceeded, the UK or VAT rules in the country of destination of the goods will apply. In order to avoid multiple VAT registrations, there will be the introduction of a one-stop shop system, which Northern Ireland traders will be entitled to avail of. And all EU member state VAT liabilities can be accounted for through a single EU-wide VAT return. Given Northern Ireland's close alignment with the EU post 31 December 2020, Northern Ireland traders will be required to continue to submit EC sales lists, Intrastat returns and VES returns, although it's important to note that any movement of goods between NI and GB will not need to be included on your EC sales list or your Intrastat returns post 31 December 2020. So finally, I just wanted to run through some additional considerations which are very important from a VAT perspective and really important for Northern Ireland traders to get right. All Northern Ireland traders should ensure that they've obtained their XI EORI number. From 1 January 2021, when Northern Ireland traders are dealing with suppliers or consumers in the EU, they will need to use their XI prefix ahead of their VAT number. HMRC have also recently released guidance indicating that VAT registered businesses trading in Northern Ireland or between Northern Ireland and the EU need to notify HMRC via completion of an online form on their government gateway account to ensure that they can avail of the benefits of unfettered access to the UK and close alignment with the EU. So completion of this form using your XIURI number identifies you as a Northern Ireland business and entitles you to avail of Northern Ireland's unique position with unfettered access to the UK and close alignment to the EU. Northern Ireland businesses should also be aware that the current below £15 low value consignment stock relief measure, which makes goods below this value VAT free, will be withdrawn from the 1st of January 2021. EU VAT refund system will continue to be available in respect of EU VAT relating solely to goods. So where a refund is being claimed in respect of supply of services, the 13th directive paper-based reclaim process will be used, and this will require individual claims in each member state in which there is a VAT reclaim. There's also potential requirement to appoint fiscal representatives in EU member states. So we've discussed during the presentation that Brexit will result in potential additional EU registration requirements. And under certain circumstances, tax authorities also require companies to appoint fiscal representatives in these target countries. This tax registered company acts as a local representative of the company, managing queries and filing obligations of the company and dealing with the local tax authorities. They may also be liable for the VAT liability of the company, and because of this, appointment of a fiscal representative can often be a costly process. So that's it from a VAT perspective, and I'm happy now to pass over to Ciara from Milsalig.
Thanks very much. Hello everybody, and thanks for attending today. I am going to speak on two very big and important topics, and because they're so large and complex, I'm going to focus in on a few main points. So in terms of people, we've all been through a lot of challenge over the last year, and I don't think that's about to end. So what do we currently know that we need to do for Brexit? So as of the 1st of January 2021, the right of free movement of people between the UK and EU will end. Now that means potentially two things, and it's split into two different groups of people. So for UK and Irish citizens, we still are allowed the right to freely travel and work on the island of Ireland. So we don't currently have to do anything, but where employers have employees who are EAA citizens, then those citizens will have to apply under the EU settlement scheme to ensure that they have the right to remain and work in Northern Ireland. So the scheme has been up and running now for a while, but it will continue to run until June 2021. The key thing to remember is that anyone who wants to apply under the scheme needs to have been resident in Northern Ireland as of the 31st of December. So there is 6 months where someone potentially could still apply under the scheme, but will not be able to do so if they haven't been resident as of the 31st of December. So there really is not much time left to get any non-UK, non-Irish citizens under the settlement scheme. So you really do need to communicate with any workers or employees who haven't yet made that application. The process is pretty straightforward and doesn't require any input from employers, and there's no cost involved to employers. So the message really does need to get out there very, very quickly, because after the 31st of December, anyone wishing to work in Northern Ireland who is not the UK citizen or the Irish citizen, then they must apply under the full immigration scheme, and there is a cost and a lot tighter rules around that. So under that, that is done in a points-based system, and there is a minimum salary requirement of £25,600. There is also very little scope for what is described as low-skill workers. Now that isn't 100% clear, but the guidance and the point system does seem to really focus on qualifications and educational qualifications or experience, and it doesn't seem to deal with or be encouraging applications from workers that may typically be involved in hospitality in terms of waiting staff and hotel staff. So that has been an ongoing concern for the hospitality industry. It is something that we have been lobbying for in terms of tourism in Northern Ireland because there has been a real shortage of people to carry out those types of roles. And under the scheme post January 2021, there just is no provision at that salary level. So it's very, very important that any employees who would fall into that bracket do make that application under the EU settlement scheme, and a very, very short period of time to do that. Now, in terms of asking employees and workers to do that, obviously you have to be very careful so as not to discriminate against anyone or any particular group of people there. So it's wise to ask all employees to check whether or not this is something they're required to do, and to be on hand for any guidance that they might require just to get those applications made quickly. In terms of the wider scheme, it is quite complicated, and you would need specialist advice to go through that scheme and apply, because you have to become a sponsor first. And as I say, there are those criteria around minimum skills, qualifications and minimum salary. So that process is something that can't be done very quickly, and you would need some specialist advice around that. So I do think the main takeaway on the people for now is that you would need to get the EU settlement scheme applications in as quickly as possible. So data protection, I think we have all become quite used to dealing with GDPR and data protection over the last couple of years since the change of law back in 2018. And for a lot of us, there will not be any major changes. So data in the UK as it stands, if you don't have any outside customers or contacts and you don't process data for anyone outside the UK, then the rules effectively remain the same and will be governed by the Data Protection Act 2018, which we should be familiar with by now. And alongside that will sit GDPR. It isn't directly brought into force in the UK by the Data Protection Act, but the impact of it is there, and they will sit side by side. So if it's UK only data, then no major change, and just make sure that you are compliant, generally speaking, but it is something that we have been used to over the last couple of years, so hopefully that won't cause any major difficulties. But if you process data that is outside the UK and within the EU as of the 1st of January, you still need to comply with GDPR. So you need to make yourself aware that you're fully compliant with any additional data that's over and above the UK data regulations requirement. So although GDPR has been there around for some time, we have really focused on the UK and complying with the Data Protection Act, but there would be that additional requirement to make sure that you comply with GDPR if you're processing data for anyone outside the UK. The UK will become a third country, which means that there will be additional requirements placed on us by the EU, and they will want to make sure that the UK are compliant with data protection to the same level and standard as the EU currently apply. So there will potentially be adequacy agreements put in place for the UK. We're not really sure exactly how that's going to work out just now, and that is to be negotiated, but in the meantime we can get around that, if you like, by making sure that we are compliant with GDPR if we are processing any data from outside the UK. So what does that mean? A couple of things. So if you are simply processing data and you aren't supplying any goods or services, you can make sure that the data continues to freely flow between you and the EU member state by entering into an agreement, and there are standard agreements available, and those are available on the Information Commissioner's Office website. You can either use the full contract or just incorporate some of those terms into your contract, and if you can show that you have those terms and they comply with the ICO standards, then that will be sufficient to allow you to legally and lawfully continue to process the data or control the data with the EU, with the other EU member state. It's basically about agreeing with the other party that you are going to comply with the necessary data regulations. Now, if you have customers or provide services outside the UK and to an EU member state, there is then a requirement to appoint an EU representative. Now, this comes into force as of the 1st of January. Not a lot of people seem to be aware of this, and it is causing a bit of panic now in the last couple of weeks about what this means. So an EU representative can be, if you have a place of business in that EU company, in that EU country, you can appoint an employee. It doesn't have to be someone outside your business or a standalone EU representative. It can be within your business. But if you don't have a place of business and you are providing those goods and services into an EU country, you will have to employ someone as an EU representative in that country. Now, that can be done by a services agreement. We don't know in terms of compliance or enforcement how that is going to be looked at. There definitely is provision for penalties against someone who doesn't comply with the requirement to appoint the representative, but we don't know whether or not there will be any leeway or a further transition period around that. So I would say that it's something that definitely needs looked at as a matter of urgency. I have been doing a bit of research and I see that there are specialist companies who provide that. The issue is that you're supposed to have an EU representative in each of the countries into which you provide the services or supply the goods. So potentially if you are working and supplying across Europe, you would need quite a number of different EU representatives appointed. There seems to be companies who will take care of that for you, but I would definitely approach this with caution because they are supposed to be resident in the country into which you're providing the goods or services. So just make sure that there is a place of residence, and then again that the appropriate service agreement that you have with the company or the individual who's going to be your representative is fully documented, and that that's something you can point towards to avoid that fine. Now, there is an exemption, but again, it hasn't been tested because this is new and we don't know how far the exemption will stretch. An exemption for occasional or low-level use and processing of data into the EU country where you're supplying the goods and services. I don't know how much that means, whether that's low in terms of monetary or in terms of the risk of the data. And the additional requirement around that exemption is that you must not be regularly processing any special category data. So that's your sensitive personal information. So it may be that people will seek to rely on that unless you know, they have large scale business. So if you only occasionally do business with someone in another EU member state, then that might be something that you would want to look at. And I think it'll be a case of watch this space in terms of how tightly that will be enforced and penalised. I would suggest the ICO have been very busy and hopefully will turn a blind eye for the meantime. in terms of making sure that it's compliant from their perspective, but we don't know how Europe are going to react around that compliance. So it definitely is something that needs to go to the top of the priority list in terms of data protection. And of course, when we say EU countries, that of course we're not getting that special exemption for Northern Ireland and Ireland as we have with the people. So the Republic of Ireland does count as an EU member state in this regard. So if you regularly do business into the Republic of Ireland from Northern Ireland, then you will need to appoint an EU representative there to make sure that you are data and GDPR compliant, and again, make sure that that is fully documented. So I know that was a quick run through in terms of a very large topic, but I hope that you've been able to pick up some very key and important points to take away and to action here today. So on that, I will just pass back to Feargal. Thanks very much.
Thank you very much, Ciara. Very informative indeed. So really, I think you'll see that what we've tried to cover is some very technical subjects and very challenging because some clarifications are still awaiting. And really, I think what we're actually saying is that don't panic, but make sure that whatever about the Brexit uncertainty, that you are prepared to be prepared, if that makes sense. So what we're really saying is that really the past, you can't change the past now, but our present circumstances don't determine where we go, they merely determine where we start. So therefore, what we're really saying is, if you haven't given Brexit the time it deserves up to now, it really needs to go very top of your business priority list. And, you know, in simple terms, you know, it makes sense because the future belongs to those who plan for it. And as we've said in a few other of our webinars, if you don't have a destination, you'll never get there. If you and I didn't decide to be in this webinar today, we wouldn't be in it. And failing to plan is planning to fail. And, you know, it was Henry Kissinger who said, when you don't know where you're going, every road will get you nowhere. Just think about that. Give that a little bit of thought. And whilst we accountants maybe are too often accused of analysing the past too much, we've got to all recognise we have to design the future. And design means putting things together to deliver a value-added solution. And in this concept, to exceed, obviously, customers or client expectations. And in this context, we could not be conscious enough of Brexit over the next few weeks. It's really important to our business. So really what we're saying is nothing to panic about, but certainly something we got to give great attention to. And that agile planning is pivotal to business success, and the future belongs to those who plan for it, especially in the context of responding to the implications of Brexit and living with and post-COVID-19. A no deal will still have a huge hit to the Northern Ireland economy, especially in the short term, albeit the goods will still flow between Northern Ireland and the EU as they do now. A no deal will also have an impact on GB to Northern Ireland movement of goods, including in supply chains. And it's fair to say, yes, there is an array of non-goods trade issues, including exchange of data, which you've already heard Ciara cover so eloquently, selling of services, transport security, etc., that will affect the island of Ireland. Brexit, however, will also create opportunities for Northern Ireland businesses. For example, if sterling happens to become weak, that means that our businesses could be more attractive to people in the south or indeed the rest of Europe, better value to them. Similarly, there is no doubt that there is an expectation that Brexit will enhance foreign direct investment for Northern Ireland because of Northern Ireland's unique position. So really what we're saying is, and certainly it's true with Brexit and definitely COVID, sometimes we cannot control the events around us. But, and it's a major but, we do have the ability to choose how we respond. And as sure as night follows day, individuals make choices every day. And we've said this before, but make no apology for saying it again. Individual actions matter and can be a force for change. And really, let's enjoy Christmas, but equally be conscious that let's try and make every moment count in a safe environment. We've covered a lot today, and there's a lot of technical issues, but unfortunately that's the nature of Brexit. However, If today's webinar has raised an issue or a question that you'd like to discuss in private, you can get in touch via email, industry.development@tourismni.com, and Tourism NI will organise that you get a call from a finance expert. Certainly, we have been delighted to participate in a number of the Tourism NI webinars, and in case I don't get a chance after the Q&A session, may I wish you all and your families a very safe and happy Christmas, and best wishes for 2021 and all that Brexit brings. I'm looking forward now to joining my colleagues in a question and answer session. Aving's in such big demand, actually she's going into another webinar, but Colleen and Kira, and indeed will also be joined by Teresa Campbell, will join Patricia and myself in the Q&A session shortly. So look forward to hearing your questions, and thank you again for taking time to be with us today. It is much appreciated.